my number one piece of advice is used to be that the big ate the little. So big companies would eat up little companies, but in Web3, the fast eat the slow. And so if you want to make it, you got to not just go fast, you got to produce quality as well, but you also must go fast.
Welcome to Just the Metrics podcast. Today we are having a conversation with Max Hunt and Don Reddin from the Faculty Group. Faculty Group is a collective of blockchain native companies focusing on building, fueling, and guiding Web3 companies. Max is the Chief Product Officer at Otaris, the business development and accelerator arm of Faculty Group. And Don heads the strategy and innovation there.
Thank you. Thanks for having us.
Great to be here.
Thanks for taking the time to be here. So could you just briefly describe what Faculty Group is and what Otaris Catalyst Accelerator is?
Yeah, for sure. So Faculty Group started basically as market makers, a bunch of Web3 enthusiasts back a bunch of years ago now, got together and discovered there's a great need for market making, liquidity provision in Web3 space. And after that had quite a bit of success, started helping projects to launch. So more than just post-launch, but helping them to launch. And that had quite a bit of success. And so they started really running that whole project life cycle from ideation right through to launch. And as it stands now, market makers, I think they've just clocked over about 20 billion volume and around 200 portfolio companies in our venture arm. We're also a venture studio, so we launch our own projects as well. We have an incubation arm, so we bring in really high quality, top tier projects to help them. Like when the team is good and the project is good and the timing is looking really good, we'll help build out the whole company, the whole project really, all the way through to launch. And then we also have an advisory arm, which is much more just like hand-holding and opening doors and introductions and perhaps helping with fundraising as well. And then our accelerator arm as well. Max and I really work in that acceleration, incubation, advisory part of the company. And then the gigabrain quants work with the market makers and VC arm. And we got a few other things going on as well. Like we work with a lot of really key opinion leaders in the area. We've got a faculty entertainment arm that's dealing with a lot of Web3 and enterprise companies and big brands as well. Musicians and sporting teams and athletes who are looking to get started in Web3 or anything to do with blockchain. We really like to be helping people the whole way through their journey. So yeah, that's basically what we do. It keeps us very busy.
When did Faculty Group start as a company? How long have you been working on? How long have you been providing these services?
Yeah, so in individual parts for maybe 6 or 7 years. But then, like I said, our founders really came together around 2017 to 2019 to really lay the foundations for what is now Faculty Group. And then around 18, 19, 20 was really where the company started to take off.
And 2017, that was the ICO boom. And there are a lot of companies which started during that time frame because I think that period actually triggered this imagination of what could come out of Web3 space. It's been 6 years from 2017. And what do you think where the space is at now comparing to where it was in 2017?
Max should go for this one.
Okay, the space now is much more developed. 2017 obviously saw projects with white papers and light papers get funded with basically a lot of vaporware, and very few developed any product post-launch and basically either had a burn rate that exceeded the development and all went to zero. There were obviously quite a few projects that kept building. And then what we saw, I think, between the bear market after that ICO boom, there was a little bit, I would say, of, building. It's still not on par with what we've seen in this bear market. This bear market really saw a change in the way that companies were building. So the approach from projects building post the last cycle, we saw projects sort of understanding that the token economics and the business model were, hand in hand. They were trying to develop real businesses with real use cases, but also real cash flows and real users. And so what we've seen through this bear market is it's been a long grind, but a lot of the service providers and a lot of the companies that were established and survived through 2021, 2022, they all had staying power, and they understood that they needed to grind and build for the next 2 to 3 years to get over the hump. And the technology that's been built during this time it's way beyond the TPS wars of 2017. And there's still too many projects, but at the same time, you need that. When you're building at this pace, it's trial and error, it's excitement, it's fast paced. So we need to see that sort of hot pot of projects being built. And I think there's a lot more quality being built in this over this bear market. So I think this next cycle is going to be quite exciting.
Yeah, because it is also the part of maturation that happens in a market which was non-existent 6 years back. And it's been like a lot of brains and money is coming to the space. Part of what you do is also helping those people to understand how to manage and what are the perspectives. And a lot of the projects start with the first-time founders, and they have not so much experience on how to drive a company. And you, from an advisor, mentor perspective, helps, the way I understand it, you guys helps with that for them to understand, to go through this period, right?
Yeah, absolutely. And even things down to like, you go back 6 years, 7 years ago, the whole blockchain ecosystem was very fragile. Rumors of China banning Bitcoin could tank the whole market, for example, or, your favorite exchange having an outage for a little while could tank the price of Ethereum. That kind of flash crashes really had a big impact. Rumors had a big impact on the market, those kinds of things. Whereas in the last couple of years, we've had like legitimate black swan events such as, Terra Luna, FTX collapse, those kinds of things. One of the big benefits that I guess that we have been able to bring to our clients, but also I guess the people in our kind of sphere of influence is the people who we have working at Faculty Group saw those things coming. And so we're in a position to be able to mitigate the damage, not on a macro level, obviously, because the whole industry getting upended impacts everybody. But some people were, in fact, some VCs, many projects were completely taken out of action by both Terra Luna UST and also even more so by FTX, either with their entire treasuries being tied up or being tanked, or one of the big things was with Luna, because there were so many layers of people, lending to companies, lending to ecosystems, lending to whatever, that once the dominoes started to fall and VCs started to fall, all of the promises those VCs had made to other companies all of a sudden could not materialize because they had no dollars in the bank and no way to get that money. And so even things like that, and I'm not suggesting that by any stretch of the imagination we can see everything coming, but having the experience and the expertise helps to mitigate from even things you can't see coming, because like you said, there's basic elements of creating a business that are shared by every business or every company, and especially founders with a strong tech or dev background perhaps don't, they're not aware of what it actually looks like to build a company. They know how to build an app or a DApp or even an ecosystem of technology, but don't know how to build a company. Certainly don't know how to scale a company, so we'll help there. Then there'll be others who have great ideas, great networks, great business acumen, but no development team, and we can help there. And so, like you say, man, it really is about what are the needs of everybody in this industry, or everybody in any industry, and what are those that are either bespoke or particular to not just Web3 or blockchain, but even the verticals within them. So DeFi will have a different set of needs to GameFi, will have a different set of needs to infrastructure, for example. And so, man, it's being able to figuratively hold the hands of founders and builders along the way is really meaningful for us. And obviously it's very helpful for those founders and companies.
Yeah, and Web3 is a bit more complex than the typical Web2 businesses, because it's not only like from the funding perspective, it's not only the founders and VCs involved, seed funding, Series A, Series B, and you have like specific milestones and everything. It's a well-defined thing, but Web3 is Pretty new, and retail play a big role. Also, community building and stuff like that. Isn't it very difficult to manage, like navigate through Web3 in the current state? Or how do you manage to do that? Or what is your perspective on that?
So from a personal level,
Okay.
I really like the fact that cryptocurrency or blockchain specifically, blockchain generally, I should say, Web3 generally, is decentralized and levels the playing field so that to some degree, anybody can have the same opportunity as anybody else. That's not actually really true because there's still, like you say, there's still seed investing and various, regular kinds of series like Series A, B, for example. And even for those that are pure token projects, you still have pre-sales and seed and those kinds of things. So there's still some exclusivity for venture capital or for bigger money, but there's still a great opportunity for. And I'm trying to sell it by any stretch of the imagination. Just that's one of the things that I like most about it, from an ideological or philosophical perspective, is that it does democratize access to things that ordinarily everyday people don't have access to. Unfortunately, that also is what leads to so many scams and hustles and people getting ripped off. So, those are two sides of the same coin in one regard. Because you have access, you may not have the sophistication or the experience that people who usually kind of swim in those waters do. And so that provides a layer of difficulty there. But I think that there are most of the complexities of any Web2 company, but then the added complexities of Web3, because you have a different technology stack on top of already utilizing the same kinds of technology stack that Web2 companies are using. There's an entirely unique regulatory framework where you have to abide by the Web2, like the regular kind of compliance, in whichever jurisdiction those companies are launching or based. But then you also have the Web3 or blockchain regulations as well. And so it's all of the complexity of a regular company with the added complexity of blockchain. And so again, some people come to it from a business background, but they don't understand the blockchain complexity. And there are people who are, neck deep in the blockchain side of things and technology side of things, but really still don't understand what a seed round is or how to raise money at all, or why they should think about doing things in a compliant manner, or, why does what the SEC, which is a government department in a different country, what does it matter what they think when I'm not launching in the US of A? Whereas it actually might impact you. In fact, it does. It definitely does. And so these are all considerations people might not necessarily organically think about.
Oh, yeah. And Max, would you like to add something to that?
Yeah, I mean, on the question of, building difficulties, for projects, and I think it sort of ties in with the last question a little bit, but one thing during this sort of, I guess, the last 2 to 3 years is that it's sort of cleared the waters. So it meant that, there was a lot less VC. So projects, so obviously, early building projects, either, ICO boom, they went straight to public sale and raised money, whatever, they didn't have to think too much. And when we get into where we are now, projects that have been building over the last 3 years really needed to, step up their game. They really need to understand how to build a business, understand the core principles of business, because they were quite often going to VC rather than going to public, and VCs weren't spending any money. So they really needed, so it meant that only the really top projects, the ones that understood, their business plan, they understood how their business was going to be built, they understood how they were going to get customers, they understood how they were going to make revenue. They're the projects with good leaders, were the ones that were potentially going to get funded by VC, and they were going to be able to build throughout the bear market so then they can launch really strong. And so that's one of the areas that we have noticed at Faculty Group, is that, there was obviously less projects coming through the doors than, boom, but there was still a lot of them. But when it came to the projects that would you fund them, there was very few projects that were coming through the doors that met the criteria of getting funded. But the ones that did, we had a lot of, you had a lot of faith in it. You really understood they understood what they needed to do and they understood how to get there. And so Faculty and Otaris, where we're from, our division, we partnered with a lot of projects during that time to make sure that they had, they had everything around them. So they had all the resources available to them to be able to build. So when the cycle is right to launch, or even if they were launching earlier in the bear market, they still understood how they were going to get customers, how they're going to get revenue, and then be able to, be strong when the market picks up again.
So what are the key criteria you consider when selecting startups for the Accelerator program with Otaris?
Oh, yeah. So we actually have a bunch of criteria, but if we're putting in top three, man, always the team for me is number one. So in fact, we've worked with teams in the past that have had okay ideas or okay technology or okay companies, because while that project might not actually be the one that really takes off for them, if the team is good and has promise and they can work together, especially if they listen, like they're hungry but humble, so they listen to advice, but they're really going for it. We found that although the first endeavor might not be the one, the second or subsequent endeavor will be very good because the team is absolutely fantastic. Conversely, we've had in the past, we've had projects that have come to us that the idea or the thing that they're working on, the problem they're working on, even the technology perhaps, is fantastic. But if the team can't coalesce around the vision and execute, then it actually does. It's worse than bad, because they'll waste everybody's time. They'll waste their own time. They'll waste our time. They'll waste money. There's reputation risk there as well. So absolutely, team is the number one thing. Secondly, I would probably even say timing would be this one of the top three. Might not be second, but top three in terms of you might have a project that where the team is really good and maybe even the technology is good or the problem they're working on is really good. But if they're too early, then it's as good as being wrong. Or if they're too late, it's as good as being wrong. And so too early, you might actually start laying the groundwork that other people can build on, but you miss out on the opportunity. So while you may actually end up inadvertently helping the ecosystem, you're not helping yourself. Too late or too slow, and then again, you could miss out as well, unless you have something unique, some IP, some element that is inimitable or rare enough that there's a big enough moat around it that it can actually go and succeed as well. And then number three, I mean, pretty track record would be a good one as well. So people who have built things before can build things again. It's not to say we don't work with first-time founders. We do. We've many times worked with first-time founders. But even if someone's been successful in another endeavor, if they're working in a different vertical or a different part of Web3, we think those kinds of things will be very promising as well. So I'll also add in there, I'm not, and this might just be a personal conviction, but I'm not a massive fan of solo founders. I really, really like a good team. So again, just back to point one, where if you are a solo founder and you're failing to get traction or get noticed, I would say this is, again, it's dangerous advice, but find someone you can trust who is hungry like you are and wanting to run hard. Someone you share an alignment in the vision for the thing you're working on, and then see how that goes.
Oh yeah, because I have heard this maybe from some podcasts that maybe one founder is too low and 5 founders are too much. So something in between usually works well. From your experience, is the ideal number or something that works well?
Yeah, man, I think 2 to 3 is fantastic. I mean, we have seen groups that have come to us with a founding team of 4 to 5, but even then, there's still really a core 2 or 3, and then a couple of people who are a little auxiliary, even if they're considered co-founders. They're not really driving the project as much as those other 2 or 3 are. So Yeah, man, there really is too many cooks really do spoil the broth. And so if you have 5 people all equally trying to do the thing, I think it's a fraught endeavor. You got to have some leadership. So someone who is in charge, but not by themselves. I really like the theory of the visionary and the integrator. I think so. Someone who can, think big picture, dream big, has the drive to make something happen, and the networking skills to get people on board and those kinds of things. But then you also have an integrator. Doesn't have to be a 2IC, could be a COO, who actually can take that vision and make it happen, where they wouldn't necessarily be able to do it by themselves, and the visionary might not be able to do it by themselves, but together, that combination, or having those 2 roles amongst 3, can be a really excellent team.
I think we have seen some examples with, for example, at Apple, you have Steve Jobs and Wozniak, and
Totally.
with OpenAI, you have Sam Altman, and I forgot the second founder's name. You have
Correct,
these combos,
man.
exactly the way you described. Are there some trends that you are seeing right now as like being a VCU and being able to fund these companies in a very early stage? You observe the trend way more earlier than normal retail. So is there some trends that you're
Max, a
right
trend
now
guy.
in the types of companies that are coming to you for funding? Or is there a specific field within the Web3 space that you are seeing more and more people are building in this particular field? Do you see that?
Yeah, the trends that we've seen are pretty much on par with the trends that I guess the sort of wider Web3 community are talking about, which has been quite a lot of real world assets. So it's been very big. DeFi I think it's still very prominent, and there's still a lot of building there. We personally have seen a lot of entertainment. So a lot of, as Don said, existing companies, Web2 companies wanting to come across to Web3, big IP. So we're talking sort of Hollywood style musicians, it was tried a little bit, I think in 2017 or 18, it was tried a little bit, but they didn't really understand. They didn't have advisory. They were doing things that they shouldn't have been doing. And the last cycle obviously was slightly different. It was more sponsorship of bigger companies when you don't have the control over that. That can, so just in the same way as the previous cycle, whereas this cycle, we're seeing a lot more big IP seeking to own what they're building and really understand and make sure that it meets regulation. And so that's been a big trend for us in particular, but we see in that space a little bit more than other VCs. So that's been pretty exciting. But in terms of the general trend, I think it's been RWA, GameFi, and DeFi is like the standard stuff. But I think the real world assets had its first dash in the last cycle, and now it's coming back very strong. You can see it across Twitter, and you can see it with the projects that we're either working with or the projects that are coming across our desk. There's a lot of tokenization with the legitimacy of some of the bigger players coming in, some institutional investors coming in. The idea of token sets is front of mind for a lot of investors and a lot of builders.
Oh yeah, and this is like Web3 space is also a space where the fundamental infrastructure is also not fully developed. That development is also going on if you look at layer 1. So the question was basically, what are you observing in the layer 1? Are you also seeing a lot of other layer 1 launching, and are you funding such endeavors to new layer 1s and stuff?
Don, do you want to take this one?
Yeah, like Max was saying before, the TPS wars are kind of over. Although, having said that, maybe they're not with Solana. Let's go back to L1s. So L1s, I think, I'm just not sure how many more L1s we really need. There are particular use cases, like Cardano has particular use cases. New ones like Sui have particular use cases with like dynamic NFTs and things like that. I think for projects it's difficult because having something that's interoperable or that's going to be able to maximize their user base is one of the primary things they're going to be looking for. So obviously where there's technology that they need, obviously that's where they have to go. But if they don't need something bespoke that is specifically, or only available on one L1, then really the goal is for them to be across as many chains as possible. It makes it more difficult when there's different languages, but many chains have their own diehard communities, like Solana, like Cardano. They have, in those two in particular, have diehard fans. And even if they do dabble on EVM or they might hold some Bitcoin, they really, in terms of their ecosystem, they're maximalists for their own chain. And so one of the things that I think, are more excited about are roll-ups and L2s, even L3s. So having L3s just for your project that then resolve or connect to an L2 that connects to an L1. I think that really I'm much more, let's say, bullish on the L2, L3 narrative than on having more and more and more L1s coming into the market. And again, unless there's something unique about them, something that's actually, it's not just the same but a little bit different, but actually something, if it's something that can't be done at an L2 level, then we'll talk. But yes, having said that, we're very interested in infrastructure. It's one of the bigger aspects that we like to invest in. So if you do have a good idea, please let us know.
Oh yeah, is there some success stories of startups that have gone through Otaris Catalyst Accelerator? Is there some stories that you can share?
Yeah, for sure. We could talk about Faculty Group more generally, because the Otaris Accelerator is really a brand new program that we're rolling out to maximize our ability to be able to help projects in the way that we have been doing. We've done a lot of incubations, dozens or into the hundreds of advisory. And so some of those more kind of hands-on incubations in projects like Alliance Block, or actually should probably talk about Sigur's real-world assets, the play of the day, if you like. One called IX Swap, which again had a small team that were led by a serial entrepreneur who'd already started a very successful company called Investor X with his business partner, who was also one of the co-founders of IX Swap. And IX Swap are looking at how do we tokenize real world assets and actually help legitimize the whole blockchain space, because there are billions and trillions of dollars of real world assets held in various kinds of ways all across the world. And these are things that blockchain really does solve a bunch of problems when it comes to real world assets. Without getting into the problems, IXOP was this company or a startup that started up, again, with small team, hungry but humble, keen to learn. They were perhaps a little bit early. And so even just in recent months, they've really started to find significant traction, lots of interest, and they're about to start their own real world asset incubator, which is pretty exciting as well. And for me, that would be a classic case of great team, great product, excellent technology and excellent use of blockchain technology, and hitting the right timing. So they were a little bit early, but that for them meant they were ready when the time came.
Regarding the real world assets, one of the things with blockchain technology is its ability, the opportunity that it provides to tokenize assets and make it more liquid, and then you can actually trade them, transfer them, add more. That itself generates a lot of value. So, what do you think will be the catalyst that will really trigger the situation where a lot of real world assets would be issued on blockchain? So, as of now, you are observing the trend, but what do you think the trigger would be that would actually create push on this particular field?
I think it's all about friction. And so the more points of friction that can be removed from the process of buying and or selling, or buying, holding or selling a real world asset on the blockchain, I think that's basically the only barrier. For me, my favorite projects are the ones, other than DeFi, are the ones where blockchain kind of seeps into the background. You don't even know it's there, but it's the engine that's making these financial instruments or whatever they are operate. But you don't have to necessarily have your own, custodial, your own non-custodial wallet, or even understand how blockchain works at all. But you can still benefit from the blockchain by again, I don't want to kind of just talk up IOXOP again, but something like that, where it operates far more like a stock exchange, where ordinary investors might be used to going on and seeing something that's essentially fractionalized, that they understand something's the fractional ownership of a stock or any other kind of equity, and then they can just directly transfer that over, and they don't even know that it's happening on the blockchain necessarily. They just know that they don't have to go through the same intermediaries they had to go through before, but they can do that in a far more democratized fashion. And potentially operate people across the globe, whereas before they had to do that in particular regions. But then there's that friction aspect too.
Yeah, the regulation is also an aspect of friction, because the biggest market, that is US, it's not providing a regulatory clarity, and Europe is bringing on regulations like MiCA. Is there some jurisdictions that you are observing the more potential than, for example, US or Europe? Because usually in the startup field, US is definitely the leading, even if you look at AI, most of the 99% of the companies are coming out of Silicon Valley still. But do you observe something different in Web3 space, especially regarding the trend?
Yeah, I mean, I think Singapore is a big player in that. Middle East is on the rise as well in that regard. I even read recently New Zealand is trying to kind of get their own slice of the pie. And but man, I'm amazed that there's not a gold rush, a jurisdictional gold rush to try to attract. I mean, you know, you've got places like Miami that have said, yeah, we want to be the epicenter of blockchain technology, and that's succeeded, you know, to a degree. I think Singapore again to a degree, Dubai to a degree, but I kind of like that there are places around the world, and that it's not all being absorbed by one place. That was the danger for me. Again, if we go back to 2017, that was the danger for me in China's adoption of Bitcoin or blockchain generally. Was, are they just going to absorb all of the attention, all of the talent, all of the liquidity? It's better when it is distributed. That's how blockchain works best. What do you reckon, Max?
Oh, yeah. Yeah, I mean, the only thing I would add is I mean, Philippines, Southeast Asia obviously is massive for GameFi. I think like different jurisdictions have adopted slightly different areas of Web3. So, you know, whereas, you know, Singapore, that sort of like, it feels well regulated. It feels like more of a DeFi hub. I think the Middle East feels, you know, similar. They're a bit broader in their approach, but real world assets, tokenization, they also, you know, just basically broad Web3 adoption. And then South Asia being, you know, the Philippines, Vietnam being very GameFi heavy, because they've seen it work and they've seen what it did, you know, in that little pocket of time with Axie and stuff. It really did something. And so I think that, that is sort of stuck in different jurisdictions as well.
So because crypto has something to do with the separation of state and money, like the way back that happened with the separation of state and church. So it has something to do with the power of the the control of the country. You know, you are also practically losing control of certain aspect of the population. So it has also something to do with the friction that is created with crypto, right?
I think possibly. I think some people would say so. I just think that the technology is moving so fast that it does, regulators struggle to keep up. And I think that's a big part. Obviously, the journey for everyone to come into Web3, whether it's Bitcoin, Ethereum, and then into some altcoins, whatever the journey was, it wasn't instantaneous, and it did take effort. And you'll find that a lot of, when we're talking about different jurisdictions, we're talking about a lot of things being about securitization of assets, or we're talking about GameFi, which puts ownership of assets into the hands, which then therefore means that those assets can be exchanged, and then their monetary component can come into it. That is so different to what the system was used to, and to keep up with it requires work, and they're catching up. And I think that's more the case, is that, as we say, what is it? A year in crypto is like a It's 7 years in the real world, 10 years in the financial world. They waited a long time, and it's like network effect. It's really hard to gain. To catch up is very difficult. They're getting there. They're working towards it. And I think that we'll hope for that all good regulation, good fair regulation. So I think that that's all on its way, and it just takes work, and hopefully they're putting the work in.
I empathize with the regulators because it's tough for them. On the one hand, they want to do what's, in fact, no, they don't want to do what's best in the best economic interest of their constituents, really. They want to do what's in the best interest of their security. And from a security perspective, I can see absolutely why regulators would want to keep a really tight leash on any new financial instruments, or even things that kind of look or smell like a financial instrument. And at the same time, they're also tasked with protecting the sovereignty of their nation and their own fiat as well. And so I think blockchain generally, but cryptocurrency specifically, is a challenge to the sovereign fiat. And so I totally understand why. I don't like it, obviously. I would prefer that be much more welcoming, because I think it's going to be a significant positive for humanity. But I can empathize with them on the difficulties of, like Max was saying, such rapid advancement in such a short amount of time.
Yeah, definitely. And as the saying goes, once the genie is out of the bottle, you can try to slow it down. But ultimately, it's out. The question is how to deal with it. And hopefully there will be jurisdictions will be aping into this opportunity and hosting all these new companies. And regarding the current financial situation, so blockchain, like crypto assets, never really existed in high interest rate, or like bull market did not really exist in a high interest rate environment. And it seems like now the prices are going up. It seems like a bull market. From a VC perspective, are you making more deals right now? Because in a high interest rate environment, it's really not a really favorable environment to bring more capital into very much risk assets, or investing in risk assets, or investing especially in early stage. The capital flow could be less than in a low interest rate environment. What are your thoughts on that?
In our VC arm, we went from, 80 investments a few years ago, 100 investments the year after, to 8 investments last year, to, again, single-digit investments this year, until the last 6 weeks or so, where, as maybe even before the market started to turn, essentially when it started to bottom out, we have started to get back in the business of, capital allocation, not as aggressively as a couple of years ago, but certainly, man, we are, and not just us, but VCs are starting to deploy capital again. Yeah.
You feel like it's the situation is getting better. It's just not this what do you call this ETF bust. What do you think, Max?
Well, so it's hard to know. Is this a blip, or is this the beginning of the next bull run? Is winter over? Is this actually a trend? We don't know. However, the bear market's gonna. I mean, the end of the bear market is closer now than it was a year ago. So,
yeah,
I think part of it is that. Part of it is the interest rate rises generally, or the trend around the world has slowed. Inflation has slowed. So these are good macroeconomic data points that they're instructive or informative, at least for us. And the quality of projects coming in, they're better than they were a year or 2 years ago. The go-to-market strategies are better, more refined, have greater clarity than they did certainly than 5 years ago. And so I think people are learning, actually, which is really great. And through the bear as well, there's been a massive consolidation. People coming out from Web2 in particular. I mean, AI has sucked up a lot of that talent, or new startups, kind of foregoing Web3 and jumping straight into AI. But many are trying to synthesize AI and Web3, or utilize both technologies, which we're finding is a significant trend. And man, I guess money goes where the trend is, because the trends are generally reliable for a return on the investment.
Okay. Yeah. Max, do you have some thoughts on that?
No, that was good. I'm happy with that.
Okay, cool. So if some people are listening, some founders are listening, some projects are listening to it, how can they reach out to Otaris Accelerator, reach out to you guys? And what is the process of contacting the Otaris Accelerator program? And how are you onboarding people?
Yeah. So we take projects really at any stage in their life cycle. So again, if a founder or a small founding team come to us with a really, really good idea, we want to talk to you. If you have an MVP and you're just not sure how to go to market or what to do with it or how to launch or how to fundraise, then we want to talk to you. If you've already launched and you need help scaling or you need help with new product launches or any of that kind of stuff, market making, we can help you. So basically, yeah, we're across a project's life cycle. We can help. Max and I, we specifically again work in that zero to launch phase. So again, for companies, we've got advice for those who have got the whole, all of the internal capabilities and competencies are looking really good. You just need help with direction and partnerships. That's more of advisory. There's again the full incubation, which is got a really great idea and no idea how to make it happen. Maybe we can help with that as well. And then, like I said, we're rolling out accelerators with L1 and ecosystem partners. And so that's more for the companies that have really good internal capabilities and competencies, a really good idea, but perhaps don't have business acumen or the general Web2 knowledge or experience, or they haven't started a company before and need help in that regard, or don't know which ecosystem to launch in, don't know which jurisdiction to launch in, that kind of stuff. We can help with that as well. So hit us up. It's otaris.io, otaris.io, or faculty.group. They're our websites, and we'd love to hear from you.
Okay, perfect. And finally, if someone who is thinking of starting a project or beginning a startup in the Web3 space, what would be the advice both of you, would give to that person in the current scenario? Like right now, if someone thinking of starting a venture in the Web3 space, what advice would you give them?
My number one piece of advice is used to be that the big ate the little. So big companies would eat up little companies, but in Web3, the fast eat the slow. And so if you want to make it, you've got to not just go fast, you've got to produce quality as well, but you also must go fast.
Obviously, build something that you're passionate about. If you're going to build any business, build something you're passionate about. Don't rely completely on VC for all of your money. Aim to build a business that's going to be self-sustaining. VC is going to be there to help you if you prove that you've got what it takes to build that company. You really need to approach your business from more than a one cycle, one bubble, basically one bull market. You need to be approaching it like you want to build a company that is going to sustain into the future. So your aim is to build something that users are going to want. It's solving a problem for people. And yeah, that's pretty much the main thing that we see, or that I personally see in the space.
And if you can build without a token, then do it. So
without a token, there are like hundreds of thousands of tokens. I can see that tokens are necessary in some cases, but totally unnecessary in some cases, right? It's just a distraction sometimes, right? Yeah.
Yeah.
It's a bolt.
It's a fundraising mechanism for a lot of projects. And I think that's just and that's why I go on so much about building an actual business with an actual use case beyond Web3 more constantly, more and more as we build projects, we're seeing that sit in the background and not really be mentioned in some of the VC raises. Sometimes the fact that a project is Web3 is not even mentioned at all because it doesn't really need to be. It can be, obviously it's not hidden, but it's not the main selling point as it would have been in previous cycles. Now it's the rails. It's what's fueling how something works, but we don't need to talk about it. It's not the reason for the business. So
fantastic. Couldn't have said it better. Yeah. So it was a fantastic conversation with both of you. And if people are listening to this, the links to how to reach out to Otaris Accelerator or the faculty group will be in the description. And hope you guys have found it helpful, this video, and looking forward to chat with both of you later. Yeah. Thank you, Don and Max.
Pleasure.
Yeah, great to meet you. Thank you very much.
Thanks for tuning in. If you are keen on getting deeper insights about Web3 tech, our newsletter, Just the Metrics, is just what you need. It's packed with valuable information and it's completely free. You can subscribe by clicking the link in the video description. It's a great way to keep up with the latest in the Web3 space straight to your inbox. And before you go, please hit that like button and don't forget to subscribe to our channel for more updates and insights. Your support is what keeps these videos coming. So see you in the next video.